Rather than dwelling on something you cannot control, unless you decide to be a politician tomorrow lah, here's something you can control. What is the most reliable passive income strategy after retirement? Having a consistent dividend portfolio that is beating the inflation rate. Sounds easy, but how? But you can only get consistent and higher dividends when the economic and government policies actually benefit the company or a business. But how can you get such knowledge faster than everyone else? Like knowing what economic policies or even regulations that will be in favor of a certain stock sector. Easiest way I tell you, be in a position of power. What? What do you mean? When you are a politician, you see, who also happen to be one of the lawmakers in a country, you can gang up with other lawmakers and actually steer the direction of the economy or the business condition. Literally, you are like in a driver's seat. Exert your influence on things like what goes into the budget every year, which business sectors has to pay more tax, who to award the contracts to. Wait, really? Are you kidding? Yes, really, and no, I am not kidding. Check out this other video below. But understand this, normal people use time to make money, the pros use money to make money, legends use privileged positions of power to make money. Truly the safest way to predict the profitability and ultimately the dividends of any company is when you are in a driver's seat, period. Hey, I never say it's easy, not everybody can be a politician or lawmaker, but that's the truth. That means looking at price charts and analyzing annual reports are not the way to make money from the stock market. That helps, but these are historical data. Stock markets are forward-looking. Historical data does not drive stock prices, at least not much, but future prospects do. But look, even if you are not in the driver's seat or the lawmaker, being a politician alone is probably the second best thing to do. Being a politician even without being a lawmaker, well, you know, you got lawmaker buddies that make you privy to lots of private, sensitive or non-public information that the general public do not even know that exists. You can be the first mover when it comes to buying or selling stocks, you know, and dividend stocks especially. First in line to take action, whether you buy early and you reap the highest profit before everyone else, or you sell early when, you know, there's bad news to minimize losses. So whether you use this information for your benefit, it boils down to ethics and personal motivation. Exactly. So we, the retail investor in the stock market, when we invest, we are like the bottom feeders, while the politician and fund managers are the surface and mid-range feeders. Yeah, but here's a consolation for you. Rather than dwelling on something you cannot control, unless you decide to be a politician tomorrow lah, here's something you can control. Build up a dividend-generating investment portfolio that is large enough to throw off more than enough passive income with minimal risk, so you enjoy the lifestyle that you desire in retirement. Think about it, the higher the actual capital or the principal amount of your dividends portfolio, the lower the required investment return rate that you need to throw off that kind of passive cash flow that is enough to cover all your expenses and beating inflation at the same time. Say I have a 2 million liquid net worth, a 2% per year in fixed deposits today probably gives me a guaranteed 40,000 a year. Well, I think I could scrap by with that. But what if it is a 10 million liquid net worth? Even a 2% per year in guaranteed fixed deposit gives you 200,000 a year with absolute certainty. And the more capital that you build up using your active income in your most productive years, whether in your career or business, the less risk you need to take with your money after you retire, or should you decide to not work anymore, because your passive income now from dividends are more than your active income. Now, my friend, this is something within your control. Which is why you hear people say, right, be more aggressive in your investment portfolio when you are younger. So over time, the compounding effect snowball to a larger capital when ultimately a person retires. Exactly. Oh, do not use hope and pray strategy that a dividend stocks that you invest into today will stay constant forever. Actually, very few dividend stocks can achieve that. Why not? Watch this video in the links below. And that is the reinvestment risk that every retired person needs to manage on their own, or they could have an advisor to actually consult with. See this client testimonial when they consult an advisor below. Explain what is reinvestment risk. The uncertainty to obtain similar level of cash flows or yields after you are forced to sell off that dividend stocks A, which used to give dividends but no longer do because its business is losing money. And then you have to take that sales proceeds to put that into another stocks, maybe stocks B, C, D, X, Y, Z, that can deliver equally good or better dividends going forward. Oh, I got it. That's like I put my money into fixed deposit for 2 years, lock in 2019, and then fast forward to 2021 when it matures, I can only renew it at 1.5% instead of 3% when I put in that money in 2019 because the interest rate has dropped. Exactly. How about giving this video a like, thumbs up if you have made it this far? Thank you very much. Follow for the next episode, and if it's already released, it's here. If not, this is the next related videos you definitely want to watch. Do not forget to check out the upper right hand corner or below for more secret videos only CF Lieu channel insider gets to watch.